Hello everyone, my name is Kunle and welcome to this tutorial on trading earnings reports. Alright, so US listed companies or companies that are listed in the US have to report their earnings every quarter. That's 4 times a year. Depending on the performance of the company in the earnings report, it can lead to huge price movements, and traders and investors can take advantage of those price movements to make a lot of money. But of course, you need to know what to look out for in the company's earnings report. So in this video, I'll be showing you the 3 metrics you need to check in the company's earnings report in order to be able to understand how well or how badly the company has performed. I'll be using Roku as an example in this video. Okay, so the first metric that you have to take into account is the EPS, or earnings per share. This is basically the earnings realized in that period divided by the number of shares. That's pretty straightforward. It's also sometimes called the bottom line. The next metric to take into account is the sales or revenue. Again, pretty straightforward, sales or revenue. Also sometimes called the top line. The third metric, well, it's not actually a separate metric, but it's called guidance. It's not separate. It's the same as the EPS and sales, but it's talking about the future instead of the past. So some companies will give you guidance for 1 quarter. That's the next quarter. Some companies that are more confident will give you guidance for the full year. I would put more weight on a full year's guidance compared to 1 quarter's guidance, because it's a longer period, right? Now, the guidance is very, very important. Some people forget to look at the guidance. They just look at the EPS and the sales. They don't look at the guidance. But the guidance is very, very important. But why? Why is the guidance important? The reason is this. The share price of a stock is based on the future performance of the company. It's not based on the past, it's more based on the future. However, the past is also important. The EPS and the sales are also important, because if a company has performed well in the past, then they're likely to continue to perform well. So they're all important, but don't forget to look at the guidance, because it is very, very important. Okay, so now let's look at the example of Roku. Roku is a television streaming platform. Think of Roku as a company that's trying to take over from your traditional cable service, okay? So Roku reported earnings yesterday, and they reported an EPS of 45 cents. Now you can see that the 45 cents is in brackets. The bracket means it is a loss, okay? So if it's in bracket, it means it's actually a loss, right? EPS is a loss, right? If it's not in bracket, it means it's profit. So don't forget that. Now, the other question you're probably going to be asking is, okay, is this a good number? Is it a bad number? How do I know? How do I know if it's good or bad? Okay, so for you to know whether the number is good or bad, you have to be able to compare it with another number. So how do you know the number to compare it with? Okay, let me explain. So every company has analysts that look at the company and do some modeling, and then they come up with a number. So those analysts might be from Goldman Sachs, from JP Morgan, and the rest of them. So different analysts will then look at the company and say, okay, I think that Roku is going to report earnings EPS of 35 cents. Another one might say 40 cents. Another one might say 50 and 60 and 70. So the analyst consensus estimate is an average of all the analyst estimates, and that's what the consensus estimate is. So to know whether Roku has done well, you have to compare what they reported with what the consensus estimate is. In this case, they are in line, which basically means that the consensus estimate was they would lose 45 cents a share, and they've actually lost 45 cents a share. And so that's in line. Okay, so what that means is they haven't done badly, but they also haven't done particularly well. because it's in line. Okay, it's not a surprise basically. Okay, so now what they've also reported is sales. So let's look at the sales. They've reported sales of 320 million. The consensus estimate is 306 million. So they've actually done better than the consensus estimates, which is a good thing. But now, one thing you have to remember is think about by how much did they beat the consensus estimates, because that's going to make a big difference. So let's say, for example, that instead of reporting 320 million, let's say Roku had reported 520 million, right? That's a much bigger beat than 320. And the result that you're going to get in the market and the reaction into the share price you're going to get is going to be a lot bigger. So remember that. So that's what you need, EPS and sales, really. So EPS and sales will be enough for most companies. For most earnings reports, what you need is look at the EPS, compare it with the estimates, look at the sales, compare it with the estimates. For some companies like Roku, because Roku is a streaming service and they use subscribers, they depend on the subscribers, it's important. Investors want to know how they're performing in terms of the active accounts. So, and they've also reported that they have grown year over year by 38%. So if you compare what the active accounts were in the first quarter of 2019 and you compare it with this first quarter of 2020, they've grown by 38% year over year. So like I said earlier, all US listed companies have to report their earnings every quarter. So what is earnings season? Earnings season is the period of time when most of the companies are doing their earnings report. Now for the first quarter, Q1, it starts from the Q1 is 1st of January to 31st of March. The time that the companies report for that Q1 is called earnings season, and that earnings season starts from the middle of April to the middle of May. So that's a very active time for traders and investors, and there's a lot of opportunities in that period. So Q2 is April, May, June, and it's reported in the middle of July to the middle of August. So that's all you need to be able to trade earnings report and trade it profitably. Okay, I threw in conference calls there because conference calls are very boring. They are the most boring thing. But if you wanted to take it even further, if you want to be a geek and you're not bored about things like conference calls, just go on the company's website, click on investor relations, and click on events and presentations, and you can listen to the conference calls. You can either listen to it live or listen to it on demand. If you enjoyed the tutorial and you would like to see more of these types of content, I would say subscribe to the channel and turn on the notification button. So thank you very much for watching, and I'll see you at the next video.